All right. Hello, everybody. Welcome to Nexgen Software Services. My name is Mark. I run the live room, the education room, Monday through Friday from 9 a.m. till noon. It's where you can get rules and feedback on everything that you do. We can work on trading plans, entries, exits, management, anything and everything that you need. I'm available 15 hours every week live. Today I wanted to talk about just some of the stuff that you'll need to know when you begin with NinjaTrader if you're new to the platform. Everything that I'm talking about is available right here in the software user guide straight from the education page. And it's just laid out for you pretty easy. Anything and everything that you may need with NinjaTrader is going to be available right here. So we're going to get to work. Once you double click your NinjaTrader icon, it's going to bring up your control center. And the first thing that you want to be sure of is that you are connected, which is that green dot in the bottom left-hand corner. If for some reason you are not connected, if it is black rather than green, just go to your connections drawdown. And you're going to pick your live data, click on it, you can see it processing, goes green, you are good to go. Next, we're going to open up workspaces, guys. Nexgen provides you an awful lot of workspaces. Mine's a little streamlined because these are the ones that I use in class, but you'll just pick whatever it is that you'd like to trade for the day, whether it's crude oil or the S&P, the NASDAQ, the mini Russell. Everything that I teach every day works on any time frame, any market. If you're a stock trader, if you are an options trader, we have people that do that. We've had farmers hedge their own crops through futures, and everything is just about patterns. Today we're going to open up crude oil. Once I click on crude oil, the charts are going to begin to populate, and they will show up. This process takes about a minute as your charts run their calculations, creating areas of Fibonacci support, Fibonacci resistance. It's actually going back over a historical time frame, measuring every swing in the market, measuring it forward, backwards, synthetic time frames. And what it does is it gives you the ability to recognize where the market has the potential to stop, where it has the potential to bounce, letting you know when you have a clear path to get to the next target. And that's one of the things that we talk about each and every day in class. A very common mistake that I made when I first started was just not understanding how to scale my charts, how to get them to look the way I wanted them to look. The most important thing that you need to know is that the black highlighted in the vertical axis, this is the most current price. So crude oil right at this moment is trading at 78.85. And because it's trading at 78.85, I see that, I know it's there, I can make decisions. Maybe I had a target, maybe I had an entry. And there's some scaling things that you'll need to know. If you bump your chart off to the right and hide everything behind where you can't see it, this white arrow will bring you back. Just brings you right back to the most current bar. Same thing as if you slide it all the way off this way, that arrow is going to bring you right back. Next, with the vertical axis, I can squeeze it down. Maybe I squeeze it too much. If I click F, puts it back the way it needs to be. I can also accordion a little bit from this bottom axis. Remember that these are your charts. Make them comfortable for you. Some people like to trade like this. Some people like it a little more spread out. I personally am a huge fan. I want to see where I'm coming from, and I like to drop down and see where I'm headed. So make it comfortable for you. Use the F, use the arrow, and if you don't see them, your charts are just fine. You're always going to stay on the most current price. The next thing I want to talk about is Chart Trader. The way we teach the methodology to new users is you are going to be so precise with your entries, you're going to wait for the market to come to you with a limit order. It's a pretty simple process, but you have to open up Chart Trader first. So I'm going to go to my entry chart, and I'm going to click on this icon for Chart Trader. Once I do that, I'll open it up, and it's going to talk about a couple different things. It's going to let me know that I'm on my simulated account. One of the advantages of what we do is that you can practice without any risk of loss of money. It's going to let me know how many contracts I'm trading, 2. It's going to let me know what my ATM strategy, my automated trade management strategy is. Nexgen provides you with so many options. You can pick what's right for you. You can create a custom one for yourself. You can use one of the prepackaged. But make sure that something is in. You're going to be good enough at what you do that you'll know where the market shouldn't go, and you're going to have a great understanding of where you want to take profits at. Once your ATM strategy is in place, we enter on limit orders more often than not, guys. So there's 2 ways to do it. I'm going to drop this to the center. If I right click above the current price, it's going to give me the option to sell limit to. So if I click that, what I'm saying is that if price comes up to 79.01, I want to be in a short position. I want to sell the market. And of course, the opposite is true. If I right click below the most current price, it's going to give me the option to buy, which means that if that market comes down and touches 78.70, my anticipation is that the market will continue up. That's my hope anyway. So limit orders are one of the most popular ways to get in, doing what we do. But you may also just buy the market, which is right up here. If I buy the market, there it is. I'm now in a position. The market's not actually moving, but what it's showing is that I'm in the market at 78.85. I'm in 2 contracts. I have a protective stop below me, and I have 2 targets above me. So sometimes we need to move our stop. Sometimes we need to move our targets. If I need to move a stop, I simply click the red line, and I can move it all the way down here, and I can move it all the way up here. And until I click a second time, the original is active. So I can move my stop here. Maybe I want to take targets a little lower. This is not a trade as we teach it. This is just for educational purposes. And if my first target is hit, I can move it to the opposite side. I'm still in 1 contract. I still have 1 contract in play. My stop is still in play. And then if it hits my second contract, well, then I'm out of the market. The same is true as if it hits my stop loss. It'll pull me out of the market. Selling the market is the exact same thing, except my stop is going to be above me and my targets will be below me. And once again, if I need to move a target, maybe I expect to get to the blue line, I can put my first target there. Maybe I want to have a runner that goes down at lower Fibonacci support. And I can always close out of a position with the close arrow. And that is really just what I want to talk about, guys. These are the kind of mechanics that you can take a little bit of time, practice them, get into the market, get out of the market. If you're having questions, please come to my classroom, raise your hand. I'm more than happy to help you out with this. And then, of course, go check out the user guide. That's going to help as well. I'm looking forward to seeing all of you in class, and have an awesome afternoon.